and welcome. This is Arvind Mota here, and in this video I'm going to explain a sample trade on SBI Bank. We'll try to identify buy zone, sell zone in this particular stock, and we'll see where you can keep a stop loss. And I'll also show you a sample scenario on how we can actually place an entry order and how we can use averaging to your benefit in terms of mitigating risk or also maximizing your returns. So we'll see that. Okay, so in SBI Bank, I'm currently the daily chart and trading view. So you can see here SBI Bank was kind of bearish yesterday and it turned bullish today on Feb 13th. This is forming kind of a piercing bullish pattern, and most likely this indicates the price will be bullish. It will be going up, right? So you can look at this chart on the daily chart. You can see the SBI Bank resistance zone is somewhere here. Okay, the price point actually broke out yesterday. It went outside my resistance zone, but this was more of a false breakout because it opened gap up, but it turned bearish yesterday. It came down to 320, right? But again, and today we had a gap up opening. It went above 329, almost 330, and it came down to 322. Again, it came back again, right? It was kind of volatile throughout, but there's more of buying happening in the market. And RSI is also positive around 56, and it's going up, right, towards 60 zone, which is a good thing. And also MACD lines are positive, all signifying that this could be going into a further bullish trend. Okay, so we can make an entry around 330 or above, and we can have a stop loss at I think 326, 327 could be a good stop loss, and your target can be 337, 338. Okay, the target can be somewhere here. I'll draw a line somewhere here, the previous high, and your stop loss is going to be somewhere here, right? So we'll take a sample scenario. Thing is, like, we're going to expect a gap up opening, so we're going to make an entry around 330. That's the way we're going to plan the trade. Okay, so stop loss is here and entry is somewhere here. Okay, the risk to reward ratio is around 1:3 here. Okay, so look at a sample scenario. So I have this sample analysis here. So in case, assuming that you have a capital of say 1 lakh rupees, okay, always remember that you should not put all the money into one stock, and always invest around maybe 30 to 40% can take per trade maximum, or always keep some buffer amount left in your account. Don't have to put all the money into one stock or even two stocks. So always keep one specific amount as a buffer. Okay, so in this case, I'm going to invest 35,000 rupees on SBI Bank. Again, I'm going to assume this in cash market equity segment only. I'm not talking about futures, options, or anything else. Okay, so assuming that this is my entry price, this is what we spoke about. Entry price is there, target is there, and stop loss is there. Okay, so I'm going to buy SBI Bank at 330 levels, and with 35,000 rupees, I can buy 106 shares. Okay, so if SBI Bank is going up, it's fine. I'm going to book profits. So in case after I buy, stock price comes down, okay, I can hold it up to 326. That's my stop loss, right? So assuming that it coming down to say 330, I buy. It's coming to 329 and 328 and again 327. Okay, so it's coming down by 4 rupees. Okay, so what I'm going to do is it is still above my stop loss. I'm not going to exit, so I'm going to take the second trade. Okay, so assuming that I take the second trade at 327, look at the average price. It is actually coming down to 328.5. It was earlier at 330 because I took only one trade, right? So what happens here is when you take the second trade at a lower price, your average price is going to fall, and the next time when SBI Bank is again coming up, right, it's coming up to 327, it's here again, it goes up to 328 and goes to 329. What happens is you're going to be in profit because it's above my average price, right? If I didn't take the second trade, I will still be in loss because my entry was somewhere here. Okay, that is the benefit of averaging. Again, I'm going to invest 35,000 rupees more. I'm going to buy 107 shares here, and currently I'm holding 213 shares at 328.5. and even if SBI Bank is coming here, I can exit the trade with small profit or at least in break even. So there's not going to be any loss. In case SBI Bank is coming down here, I'm going to exit with stop loss. I'll exit the trade. Okay, so in case if I didn't take the second trade, I will be losing 4 rupees per share. Okay, but here I'll be losing only I think 2.5 rupees per share, which is a lesser loss than compared to the first trade alone, right? That is the benefit of averaging when the price is falling. Okay, now let's look at an example if the price is increasing, and what can you do in terms of averaging, right? So I'm going to remove this. So stock price you buy at say 330, okay, and price goes up to 331, 332, and it goes all the way up to 334. Okay, my target is still 4 rupees away, so I see a good bullish trend, and I'm confident that SBI Bank is again going to hit my target. So I take second trade at around say 334. Again, I'm going to invest 35,000 rupees more apart from my first trade. So I buy 105 shares again, and my quantity is increasing to 211. And look at my average price, it's actually increased to 332, which is 2 rupees above. Even though I make the second trade at 334, my average price is again here. So in case if I hit my target of 338, I'm going to book a profit of 6 rupees per share. Okay, which is for 211 shares, right? So 211 into 6 rupees, that's my profit. So if I didn't take the second trade, what is my profit? Is I'm going to have 106 shares into 8 rupees profit. Okay, 848. This is a sample scenario. So look at this. Because I took the second trade, I'm going to book additional profit of I think 400 rupees, 400 rupees odd, right? That is the benefit of averaging. So always keep some amount in buffer. You can take more quantity if the price is falling or if it is going otherwise. Always, if you're trading in futures or even options, take only one lot for any trade and keep adding quantity as soon as the price is moving either way. So you have a fixed target and a fixed stop loss. That is the range you're going to trade. You're not going to trade outside the range. So if it's hitting a target, you exit. If it's hitting a stop loss, you exit. Again, you can be flexible with the target. You can also hold it and wait for more profit. It's fine. But my personal recommendation is please be very strict with your stop loss, because that is when you have to learn how to manage your risk. The first thing you have to learn in trading is how not to lose money. So that's when you can manage the risk properly. Then you can focus on how to earn money. That's something which I personally recommend to all my clients. So please focus a lot on risk management. That is the power of averaging. Always keep this in mind. Don't invest the full money into one stock. And number two, always keep some buffer to average the price. If it is going other ways, you can maximize your returns or you can minimize your loss. That is the power of averaging. So again, this can be used for any asset class. If you're trading in forex or commodities also, it works. So please keep this in mind. Okay, so I hope this was useful to you. Please go and apply this logic whenever you're trading, whatever trades you're taking. Let me know in the comment box if it is making sense to you, if it's helping you. Just let me know. I would like to know from you. Okay, also I'm also conducting some free webinar sessions. If you'd like to know more from me, learn more strategies on technical analysis, just go to the link arvind.co/webinar, and I'll be able to connect with you on a live session. I'll be able to help you out. And I'm also having my own coaching programs. Please go and check out the programs arvind.co/products, where you can access my online coaching programs, one-to-one programs, also support services. Whichever program is useful to you, you can go and subscribe. And my email address is connect@arvindmutha.com. You can write to me any queries, suggestions, or feedback you have. I'll be happy to hear from you. Okay, many thanks for watching. Take care and see you in the next video. Bye bye.